Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of January 14th, 2013. Hello, I'm John Thomas from Primary Residential Mortgage, here to give you your update. Well, if you've been watching our updates, you've seen that mortgage rates have been trending higher. If we look at the bond chart on the screen, as you can see, the big trend line at the top, mortgage bonds have been trending lower. Again, as the bonds sell off, interest rates move up. So since December 6th, 2012, that's when the bonds started selling off. That's the beginning of that line, and you can see the line has continued. So we've been recommending a locking basis, but we're actually recommending floating this morning to start the week. As you can see, on Friday, we had a little bit of rally in the bond market, closed above the line of support. So if that can, that trend can continue today, we will actually maybe see the break of that downward trend, and we can see mortgage bonds start to move higher, and that would help Delaware mortgage interest rates start to recover and move lower again. So we are recommending floating your Delaware mortgage rate. Now, what's going on to make this trend line since December 6th? Well, we got a stock market rally at the end of the year. It's at a 5-year high after the fiscal cliff deal was reached at the beginning of the year. The deal gave investors hope for economic recovery for 2013, so money moved into the stock market to the tune of $19 billion for the first week of the year, moved back into the market. That's huge. Now, we could see this money move back out of the stock markets into the bonds as we see the debt ceiling debate come in the next week or two. The United States reached the debt ceiling of $16.4 trillion on New Year's Eve. So we have to about the end of February to come up with a fix, or the U.S. government will start shutting down as it won't be able to borrow to pay the bills. So that uncertainty and stuff coming out of Europe could force mortgage rates to move a little bit lower again. So we are recommending floating for right now just to see where we're at. Last week we also saw the weekly initial jobless claims for January 5th. Came in 4,000 higher than predicted at 371,000. So people are looking for signs of the economic recovery, which first shows up in decreasing weekly jobless claims and the lowering of the unemployment rate. So right now we have not had the trend of jobless claims coming in lower. They've been kind of trending a little bit higher lately. And we've also seen unemployment staying at 7.8% since November. So not really moving much downward. But it is the lowest it's been since 2008. Last week we also saw the Consumer Financial Protection Bureau released its definition of a qualified mortgage. This was required by the Dodd-Frank law that passed by Congress to regulate the financial industry. So pretty much their quick brief definition of their qualified mortgage loan: no points and fees above 3% for most loans, no more than a term of 30 years, cannot be interest only nor have negative amortization, or be subject to some limited exceptions, and there can be no balloon payment feature. So that was the definition of a qualified mortgage released last week by the CFPB. In the local news, the next free first-time homebuyer seminar in Dover, Delaware is tomorrow night, January 15th. That's at the Dover Sheraton from 6:30 p.m. to 8:30 p.m. And then the next one in Newark is Saturday, January 19th. That's at the Christiana Hilton Hotel in Newark, Delaware. 2 sessions to choose from, 10 a.m. to noon or 1 p.m. to 3 p.m. You can register for either one of those seminars by giving us a call at 302-703-0727, or you can register online, www.delawarehomebuyerseminar.com, delawarehomebuyerseminar.com. So if you need help qualifying for a mortgage, give you a free mortgage planning appointment, or if you'd like to take advantage of these record low rates and refinance now before rates move up, give us a call, 302-703-0727, or apply online, www.prmidelaware.com. Look forward to seeing you next week.